Hello friends, in our previous lecture we have completed the journal entries format and how to prepare the revaluation account, and we have seen one sum, that is 10th sum, that first we have written the journal entries, then we have prepared the revaluation account. After completing that sum, I also said that if journal entries are not asked, then directly revaluation account is asked, which is asked in next sum, that is 11th sum. Then how you may attempt the sum? In this 11th sum, we have to prepare directly revaluation account and a balance sheet after revaluation. So how will you attempt the sum? So for that, yesterday itself I have said that while preparing revaluation account, consider it like P&L account, because the other name of revaluation account is P&L adjustment account. Now on debit side there will be losses, credit side there will be incomes. If profit, if due to any transaction we are getting loss, then debit it. If we are getting profit, then credit it. So such a sum, that is 11th sum. We do not have to write journal entries, and directly we have to prepare revaluation account. 11th sum. Manju, Prabha, Meena are partners of a partnership firm. Their profit loss sharing ratio is 5:3:2. So 5:3:2 is their old ratio. They want to change their profit and loss ratio to 3:2:1. Therefore, they decided to revalue the assets liabilities of the firm. From the following information, prepare a revaluation account and a balance sheet after revaluation. As we need to prepare a balance sheet after revaluation, so the adjustments we have to tick in the old balance sheet, because while we have to prepare a new balance sheet after revaluation, the old balance sheet must be compared. So the adjustments we have to tick it out. Yes. The value of land and building is to be increased by 25%. So tick on land and building, number 1. So how we will prepare? We will prepare like just second chapter. We will prepare a revaluation account, we will prepare a balance sheet. Now land building is increasing. Suppose this is first adjustment, then what effect can be given? Due to increase in land and building, an asset is increasing, so we are getting profit. Profit means revaluation credit. And next effect we will show in the balance sheet, we will add to this land and building. And you can see that both debit and credit effects are there. How? See, revaluation credit means credit effect. Next effect should be debit. So asset is debit. We have added to debit side. So debit side plus means debit effect and revaluation credit. So this is very best scientific way to learn the account. You cannot forget it any time. Because accounts is just a thing which you are not by hearting, my friends, you are learning. See, here also the concept of second chapter is only used. We know that when an asset is increasing, we are getting profit, so revaluation credit. So if one effect is credit, other should be debit, which is on asset side. So tick on land building, number 1. The value of furniture is to be reduced by 10%. Okay. So tick on furniture, number 2, and see again. When an asset is increasing, we are getting loss. So loss, revaluation, debit. Now one is debit, other should be credit, but not on liability side. Asset we will minus. From furniture we will minus, that decrease. So debit side minus means credit, and here it will be debit. So debit and credit effect both are done. The value of machinery is to be kept 80%. Means first it is 100%. We have to keep 80%. So write in bracket reduce 20%. In machinery we are reducing 20%. Again machinery is reducing, it is loss, revaluation debit, and subtract from machinery. The book value of closing stock is 5,000 more than its market value. Actually the book value is shown 5,000 more. Now we have to keep it less. So again stock is an asset, it is decreasing, so loss or revaluation debit, subtract from the stock. So tick on machinery number 3, stock number 4. Total amount of 2,500 is kept for bad debt reserve on debtors. Actually bad debt reserve is kept for 1,000. Now total 2,500 is to be kept. They are not telling increase plus 2,500. Bad debt reserve is 1,000. They are telling to show 2,500. So total we will subtract that 2,500. In the balance sheet we will subtract directly 2,500. Now we are taking the difference. First it was 1,000, now it is 2,500. So 1,500 we have to keep the provision. So again revaluation debit only. Why? Because the provision is increased or unrecorded liability is there. So tick on debtors number 5. An amount of 3,000 among the creditors is not to be paid. So creditors are not to be paid. So a liability is decreasing. So we will get profit. Profit means revaluation credit, and subtract from creditors because they are decreasing. See, revaluation credit means credit effect, and liability is also credit side, but credit side minus means debit effect. Tick on creditors number 6. So this is the sum, is the base for 5th and 6th chapter. So in 5th and 6th chapter, same adjustments will be there, only the adjustment relating to admission of a partner or retirement of a partner will be a new thing for us, otherwise everything is same. So this chapter is very good base for the next chapters. But as I said in board exam, from this chapter, journal entry and revaluation account is asked. Here in this sum we are directly preparing revaluation account without the journal entries. That is also okay, that thing can be asked, but balance sheet is not asked from this chapter. Still we are learning for the next chapter because base is here. Base is here. Last. Interest on bank loan is of 3 months is outstanding. Tick on bank loan. So bank loan interest is outstanding, so that is unrecorded liability, revaluation debit, and add to that liability. So debit effect here and credit effect here. See, very easy. Now whenever we are preparing a balance sheet after revaluation, means balance sheet we are preparing together. Now the things which we have not written will come as it is, plus the capital and current accounts. Both accounts are given. Now as you know, whenever we are closing this revaluation account, we are getting profit or loss. Now when capital and current account both are there, so profit or loss will be adjusted through current accounts instead of capital accounts. So capital accounts will be same as it is, but current accounts will be somewhat changes, because if we are getting profit, profit will be added. If we are getting loss, loss will be subtracted from each balance, because all the balances are credit balance. Yes. So that thing is also followed. So here capital and current account is not required, because only one transaction of profit or loss will be there for partners. Other transactions are there, then we have to prepare for next sums, but here no such transactions are given. So let's first draw the necessary accounts. So question number 11. Revaluation account. Draw it for 12 lines. Particulars in bracket I will write losses, amount. Particulars in bracket profits, amount. Next, I am drawing here balance sheet after revaluation. Now here the lines are not required, because you require how much space you can use. Okay, because after balance sheet nothing will come. Liabilities, amount, assets, amount. So the people who know second chapter very well will understand this thing, and if you are understanding this thing, then next chapter also will be easy for you. So repeatedly I am saying every day that please repeat the nonsense, because exam is final. Don't think that you will be next week promoted to call it directly. Now that's not possible. Okay? Yeah. So the things are over. Let's start with the first adjustment. Value of land building is to be increased by 25%. Land building is asset. Its value is to be increased. So an asset is increasing, we are getting profit. Profit means revaluation credit. By land building account. Okay. In bracket increase. So INCR how much? 1 lakh into 25%. So 25% of 1 lakh will be 25,000. Next effect, as land building is increasing, we will add that. So land building in the inner column it is 1 lakh plus increase INCR 25,000. So the new value will be 1,25,000. Now you can see the effects. Credit side means credit. If one is credit, other should be debit. Now asset is debit side and debit side plus means debit. You can check the effect also that you are correct or wrong. Value of furniture reduced by 10%. An asset is there which is decreasing. So decrease in asset means loss. Loss means evaluation debit. To furniture account in bracket decrease. How much decrease? 10%. So 30,000 multiply 10%, 3,000. Now furniture in the inner column 30,000. Now it is decreasing, so minus DECR 3,000 in the outer column 27,000. Again we can see debit side, this is written on debit side, so debit effect. If one is debit, other should be credit. Credit means debit side minus, that is also credit effect. Value of machinery is to be kept 80%, means in bracket I have said reduce 20%. So again an asset is reducing, we are getting loss. Loss means revaluation debit. To machinery account in bracket decrease. Now machinery is 50,000. So 50,000 multiplied 20%, not 80%, okay? 20% machinery is decreasing, so 10,000. Again here also. Machinery in the inner column 50,000 minus DECR 10,000. So in the outer column it will be 40,000. Now friends, if you need to check according to the sentence, then also it will be correct. See what they are telling, the value of machinery is to be kept 80%. Machinery is 50,000, multiply 80%, you will get directly 40,000. So you can check in that way also. So machinery is 50,000, according to the book, multiply directly 80%, you will directly get 40,000. But we can understand if machinery is to be kept 80%, then remaining 20% are reduced. Book value of stock is 5,000 more than its market value. Stock is decreasing, asset is decreasing, so we are getting loss. Loss is revaluation credit. 2. Closing stock account in bracket decrease by 5,000. Because it is 5,000 shown more, now it will be decreasing. So again here also closing stock in the inner column 40,000 minus decrease 5,000. So in the outer column it will be 35,000. Total amount of 2,500 is to be kept for bad debt reserve on debtors. So we have to show first here itself. Debtors in the inner column 25,000 minus bad debt reserve in bracket I will write total 2,500. In the outer column it will be 22,500. Now as bad debt reserve has increased, so it is increase in liability, so it will be loss. So here we will write to bad debt reserve in bracket increase. How it is increasing? New 2,500 minus old 1,000. So it is increasing by 1,500. Liability is increasing. Liability, bad debt reserve is like a provision and liability is increasing, so it is loss. Next, amount of 3,000 among the creditors is not to be paid. Now creditors is a liability. Now creditors are not to be paid means liability is decreasing. So don't show it here. Don't think that on credit side always increase and debit side always decrease. See, decrease and increase is also there. So liability is decreasing, so it is our profit. Profit means revaluation credit. By creditors account in bracket decrease by how much? 3,000. Now after leaving 10 lines, creditors in the inner column 40,000 minus decrease 3,000 in the outer column 37,000. last interest on bank loan is of 3 months is outstanding. So we will write as final accounts only. Bank loan is 12%. So 12% bank loan in the inner column 30,000 plus outstanding interest is for 3 months. Let's calculate here only. 30,000 multiply 12% multiply 3 by 12. 30,000 into 12% into 9 by 12 is, sorry, I made a mistake. 30,000 multiply 12% multiply 3 by 12, 900. So in the outer column 30,900. So now where to give the next effect? This is credit side plus, so credit. If one is credit, other is debit. Or in different way. The outstanding interest is unrecorded liability. So due to unrecorded liability also we are getting loss. So loss is revaluation debit. So outstanding interest on bank loan in bracket unrecorded 900. If you want, you can directly write here, then directly plus here. That is also same. Okay, now we shall close the revaluation. Let's check whether debit side is more or credit side. Debit side total is 2,400 and 25,000 is here. So again, this side is only more. So more space little bit is required. 1, 2, 3, 4, 5, 6, 7. So friends, instead of 12 lines, when you are doing the sum, keep it for 20 lines only, okay? Because space will not be enough. 3 names of partners has to be written, so space will be not enough. So whenever you are drawing this, please, okay, make change. Instead of 12 lines, draw it for 20 lines. So this is 28,000. Minus 3,000, minus 10,000, minus 5,000, minus 1,500, minus 900, 7,600. Now current and capital both are given, so it will go to current account. To partners current account in bracket profit, and the old ratio is 5:3:2. Now who are the partners? Manju, Prabha, Meena. Manju, Prabha, Meena. How to distribute 7,600? Divide by 5 plus 3, 8 plus 2, 10. Divide by 10. Multiply 5, the first part. 3,800. Equals to 3 equals to 2280 equals to 2 equals to 1520. Again, once more. 7,600 is the profit, divide by 10 is the total parts, multiply 3, so 7,600 divided by 10, multiply the first part 5 is equals to, so 3,800. Now second part equals to 3 equals to 2280, third part 2 equals to 2 equals to 1520. Now this is profit, so profit is increasing our balance, so it will be added. So for that, first leave 4 lines here, then after that write current account. After leaving 4 lines, because we need for capital. Okay. So Manju is 10,000. Manju 10,000 plus 3,800 profit. Then Prabha, then Meena. Okay, 20,000 and 9,000. See, I am writing their balances, okay? 20,000 and 9,000. Now plus 2280 profit, pro means profit, and 1520. Now 10,000 plus 3,800 is 13,800. 20,000 plus 2,280, so 22,280. 9,000 plus 1520 is 10,520. Okay, these things are recorded. So what we have done, friends, without the journal entry, without journal entries, we have prepared revaluation account, and each effect we have shown in balance sheet. And after that, capital and current both accounts were given, and it is only effect of profit. So profit is increasing their balance, so directly we are showing in the current account because capital and current both are given. Now we will check the balance sheet. The items which we have not recorded will come as it is. Now looking at the liability side, first is capital. So let's, friends, we will record the capital of each part. Capital. Manju Praghami. We will record each balance outside only, not inside, directly outside. 1,50,000, no change. 40,000 and 30,000. So after capital account, current accounts are there which has already came. Then bank loan has already came. Then creditors have came. Now bills payable. So bills payables are 10,000. After that, on asset side, land billing we have done, machinery is also done, furniture is also done. Now investments. Investments will be 50,000. Then for current assets, closing stock has came, debtors have came. Now bills receivables. 5,000. And last, cash balance 40,000. Let's take the total whether both sides are equal or not. 1,50,000, 40,000, 30,000, 13,800, 22,280, 10,520, 37,000, 30,900, and 10,000 is 3,44,500, 1,25,000, 27,000, 40,000, 35,000, 22,500, 50,000, 5,000, 40,000. 3,44,500. So this is very good, sir, because it gives the concepts of second chapter. Also, if you remember the second chapter properly, then so much concepts are used. So how we have started the sum? We have first drawn revaluation account and balance sheet. Then we have done each and every adjustment, and we have given the second effect also. Then we have closed the revaluation account as capital and current both were there, so profit is added, loss is subtracted to current account only instead of capital. Then we have written the remaining items, that is capital, bills payable, investment, bills receivable, and cash balance as it is, because it were not having any adjustment. And finally the total of both sides should be equal. So our sum is 100% correct. Okay. Friends, the last topic of the chapter. There. Now in the balance sheet, if there are accumulated profits or free reserves such as general reserve, capital reserve, workman accidental compensation fund, P&L account profit, that is on liability side. On asset side, the fictitious assets which are not written off or long-term expenses such as P&L account loss, then all the capital expenditures, advertisement, suspense account. So these are such things which are to be written off over the years. Now as partnership is changing, all these credit balances or debit balances are to be distributed among the partners in old ratio. And because the new partnership is starting, new balance sheet is starting, so these old reserves which are not in this sum will come in the next sum. It is to be distributed among the partners in their old ratio so that they can not be in this balance sheet. The reason for not showing in the balance sheet is that we are learning reconstruction of partnership. Reconstruction partnership has change in P&L ratio or new partner or one partner is retired. At that time we are revaluing our assets. So the accumulated profits which are on liability side, such as general reserve, capital fund, or any type of reserves, or the losses which are shown at the last of balance sheet, non-written off expenses, are to be distributed among partners in their old ratio, because now these all balances will be wiped off because new partnership is coming into existence. So that is the last topic of this chapter we are seeing. And we are left only with two sums, that is 12th sum and 13th sum. 12th sum is to personally understand these journal entries, and again 13th sum is the same like 11th sum, only little changes. Okay, then our chapter will be over. Okay, which is given on page number 127. So everyone please come to page number 127. Distribution of reserves and accumulated profits among the partners. Free reserves created from divisible profit of a partnership firm and the balance of accumulated profit, if any, of current partners of the firm. General reserves, workers' accidental compensation fund, are called reserve fund, and credit balance in P&L account is called accumulated profit. At the time of reconstruction of partnership firm, reserve funds and the balance of accumulated profits are distributed among the existing or current partners in their old P&L ratio. If there is debit balance, that is loss of P&L account, and it is also to be distributed among the existing partners in their old P&L ratio. The same distribution is also made before the admission of new partner. At the time of retirement of death of old partner, balance of these funds profit and loss account is distributed among the partners in old profit and loss sharing ratio. So they are telling that this all reserves, names I will give, list I will give, that's not a problem. These are the reserves which are created from the profit, has to be distributed among the partners at the time of reconstruction, because a new partnership is coming into existence and the old is closed. Closed means business is not closed, but changes have made in the business. That can be of, according to this chapter, change in profit loss ratio, or the next chapter one partner is admitted, or the next chapter one partner is retired, or one partner is death. So at the time of these three conditions, we have to reevaluate the assets and liabilities, and we have to distribute all these reserves. So now we are writing about them, and we are writing two journal entries format for them, and we will distribute. Accounting effects of distribution of reserves, accumulated profits, losses, and long-term non-written off expenditures between the partners. So comparing to the book, my heading is very long, because in my heading itself you will understand the 50% thing what I am going to tell. That which thing we have to distribute in textbook, clearly things are not given, but according to my heading things are very clear. Okay? Yeah. free resource, accumulated profits, such as, which are they? General reserve, capital reserve, reserve fund, contingency reserve, workman accidental, compensation fund, investment fluctuation fund, and credit balance of profit loss account. All these items appearing on liability side of balance sheet, comma, are to be distributed among partners after deducting any amount payable. This I will write in bracket. If some amount is payable from this reserve, then you have to subtract in the old P&L ratio for which journal entry is as given below. So, free reserves, accumulated profits, such as what? So, underline personally. General reserve, capital reserve, reserve fund, contingency reserve, workman accidental compensation fund, investment fluctuation fund, credit balance of P&L account. So these are the names. If these names appear on liability side of balance sheet, see all these appearing on liability side of balance sheet are to be distributed among the partners after deducting any amount payable. If any amount is payable, then you have to deduct that amount, and then it is to be distributed in old P&L ratio among the partners, and the journal entry will be. See, all these are the credit balances. Now we have to distribute them, so they are to be debited and partners should be credited. Or you remember, if we have to distribute the credit balances, then partners will be credited and they are to be debited. So the journal entry will be general reserve account debit, capital reserve account debit, reserve fund account debit, contingency reserve account debit, workman accidental compensation fund account debit, investment fluctuation fund account debit, P&L account in bracket credit balance account debit. 2. Partners capital or current account in old P&L ratio. And this was the first point only. Now I have to give about the debit balances also. See, for distributing credit balances, partners will be credit and balances will be debit. Now totally opposite. If there are debit balance to be distributed, then partners will be debited and debit balances will be credited. So this is the way, and these are the names you have to remember. If they are appearing on liability side of balance sheet, then they are to be distributed among the partners after deducting any amount payable in their old ratio. And how to distribute? These are credit balances, so credit partners and debit these balances. And opposite to it, if they are debit balances, then debit partners and credit them. So this is the first point. Now we are writing about the second point, so that you will be very clear about the points. So these are all the credit balances. Now we will talk about the second point, that is credit balance. Okay. Second point. Moreover, on asset side of balance sheet, comma, loss of P&L account, fictitious assets, long term non-written off expenditures appearing such as, which are the names? Advertisement campaign account, advertisement suspense account, research and development expenditures account, other long term non-written off expenditures and debit balance of P&L account are to be distributed among partners in their old P&L ratio and journal entry is as follows. Now as you know, all these are debit balances, so partners are to be debited. So partners capital oblique current account debit to advertisement campaign account advertisement suspense account research and development expenditure account other long term non-written off expenditures account P&L account in bracket debit balance. So we have underlined again the names: advertisement campaign, advertisement suspense, research and development expenditures, other long-term non-written off expenditures, debit balance of P&L account to be distributed old P&L ratio. Journal entry as follows. So 2 points we have written. Now we are solving the 12th sum, which is only for this journal entries, okay? And 13th sum we will solve tomorrow. Yeah. Okay, 12th sum. Then 13th sum will remain for tomorrow. Then tomorrow 13th sum will be completed, and also statistics 4th chapter also will be started. Okay, so that we are going little bit faster. So 4 chapters will be completed for both. Alay and Sanket are partners of a partnership firm. Profit and loss ratio between them is 2:1. On 31/3/17, following are the balances in the books of firm. Profit and loss account debit balance. So this will be distributed, and this is debit balance. Reserve fund, this also will be distributed. Workers profit sharing fund. No such name I have given. I have given workman accidental compensation fund, but profit sharing fund I have not given. So this will not be distributed. So cross it. Then workers accidental compensation fund. This will be distributed. On the above date, Alay and Sanket decided to change their P&L ratio to 1:1. So we are only required old ratio. A claim of 6,000 is outstanding to payable to workers against their accidental fund. Please tick workers accidental fund. It is 21,000, and we will subtract 6,000, and then 15,000 we will distribute. In the theory itself I have written any amount payable should be subtracted, after that you distribute. Okay, past journal entries showing distribution of accumulated profit and loss in the books of firm. So separate entries I will give so that you can understand very properly. Okay, so separate entries will be. So question number 12. Journal entries in books of partnership firm. Date, particulars, LF number, debit rupees, credit rupees. First one. For distributing debit balance of P&L account. Now it is debit balance, so partners will be debited and P&L account will be credited. So the entry will be adjust capital or current account debit Sanket's capital or current account debit to P&L account in bracket debit balance. Now it is 18,000. Okay. Old ratio is 2:1. Take your calculators. 18,000 divided by 3. Why 3? We have to distribute in 2:1. 2:1 old ratio. Okay. So divide by 3, multiply 2. 12,000 equals to 1 equals to 6,000. So you can check 12 plus 6 is 18. Second, reserve fund. For distributing reserve fund, so reserve fund is credit balance. So for that partners are credited and reserve fund is debited. So you should know which is debit or which is credit. So reserve fund account debit to adjust capital or current account to Sanket's capital or current account. Now reserve fund is 27,000. So 27,000 divided by 3, multiply 2. 18,000 equals to 1 equals to 9,000. Then workman's profit sharing fund is not distributed, directly accidental fund. For distributing the remaining balance of workman accidental compensation fund. Okay. Balance is 21,000 minus amount outstanding 6,000. So distribution is made for 15,000. Now again, workman accidental fund is a credit balance, so partners will be credited and workman will be debited. So workman accidental compensation fund account debit to adjust capital or current account to Sanket's capital or current account. So 15,000 is to be debited. Now 15,000 divided by 3 into 2 is 10,000 and remaining will be 5,000. And at last we will write workman's profit sharing fund is not to be distributed. Okay, so our 12th sum is over. So friends, tomorrow we shall go for 13th sum and after we are completing 13 sum, I will end the session and again I will start the session for statistics chapter number 4. So that's all for today. Thank you so much.